One of the recent podcasts I've come across is Jordan Harbinger, very, very recommended. And he had one episode with Adam Grant, Wharton School of Business professor, who talks about giving and taking, or givers and takers. It's more of a personal thing and then also organizational thing. But I think it's very interesting to look at the lens of the hedge fund business from a giver and taker perspective. This is the Not Even Wrong podcast. It's February 17th, 2022. This is Krim Delco. Since the last update, we're up 1.3%. The market's down 80 basis points for the year. We are now down 20.9%. The market is down 8.2%. We're underperforming by 12.7%. So let's first go into what is a giver and taker. How does Adam Grant look at this? Adam Grant is a professor at the Wharton School. He is, I think, very good at organizational stuff. And I think organization, of course, has to do with people. So this is a little bit of psychology and business. And I would say how to be an efficient human being, because that's really what a business school lens looks at when we look at psychology. An efficient human being has a lot of facets, and one of them is to be able to give and then also, of course, receive. But fundamentally, Adam compares givers and takers, or distinguishes between givers and takers. And let's talk about what is a taker. Let's talk about what is a giver. A taker is a person that sucks energy from other people, that is only interested in the I, in the what can I do, what can I benefit from. A typical attribute of a taker is, oh, I'm only doing the important projects, and the stuff beneath me I don't even care about. She usually sucks up to the higher ups and doesn't even care about peers or the lower ups. That's a taker. The giver is somebody who has a genuine passion in sharing and giving. And that's not a Mother Teresa or Gandhi kind of thing. Adam is very clear about that. That is actually a very self-serving thing. Because if you define yourself as a giver, then you also put yourself in a position where you have to continuously provide resources to other people. In other words, you have to generate wealth, because that's the only way you can be a giver on a sustainable basis. Now, there's a lot of tricks, there's a lot of things that he offers to be a good giver in things like, let's say, make sure it's low cost. So if what you give is the baby and the bathwater, if you give your firstborn child, then, well, that's not very sustainable, right? So in other words, if you want to be a giver, think about how can I be a giver in a sustainable way. And again, I think this is very self-serving, because if you were to get, let's say you're somebody that really genuinely enjoys teaching other people. Let's say you're an undergrad in economics and you want to teach people Econ 101. You really have to study this stuff and be good at it and be good at conveying it. So that also helps you understanding the subject, for example. So these are the kinds of examples, I think, that show very nicely why being a giver is actually a good thing, and that we shouldn't think of it, again, like it's a Gandhi or a Mother Teresa kind of thing. It's more of let's say, a mindset that puts you in a position where you have to keep generating wealth or knowledge or both in order to be able to share it. So that's the giver, that's the taker. And the big question, of course, is, are you a giver or are you a taker? And I think the answer to that is, for everybody, personal. It's like I said, something that Adam goes very deep into the sort of technology of what is a giver, what is a taker, and how to avoid takers also. That's another thing. You don't want to be in a position as a giver to be taken for a ride by takers. So there's a lot of that stuff. But this is not what I want to talk about here. The purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. So we want to talk about the hedge fund business. We want to talk about generally providing services in the finance spectrum to people and how that relates to giver and taker. And why don't we start with, and I think I want to also bring in Clayton Christensen here. Every time we talk about business stuff in a more general way, so meaning what is a business, what is a hedge fund, what is it actually we're doing, I think we have to go back to Christensen and the question, okay, what is the job I am being hired for? Because this is really the fundamental thesis. And I think you can actually ask this question also in a give-or-taker way. am I a giver or am I a taker? Businesses can be takers. And I think a lot of the bad businesses, a lot of the complacent businesses, the monopolies, the GMs, the Fords, the AT&Ts, the Comcast, all these businesses that we all fret about, that we all almost make fun about, that we have gallows humor about, my cable company's trying to screw me again. These are all takers. Why are they takers? Because take AT&T. AT&T keeps raising your rates, your service is barely getting any better, and they're only engaging in very fancy stuff, media, buying big, studios, Hollywood, all that big stuff. This is a typical behavior of a taker. I would say similarly, Amazon, unfortunately, even though I have a lot of respect for Jeff Bezos, what is Jeff Bezos as a person doing? He is creating a company, the biggest positive that Amazon stock has seen in the last 3 years. One was COVID, which helped them. Okay, fine, they didn't create it, but still. And the other was they were able to raise prices on Prime. So, and what is Jeff Bezos doing? He's doing the more important stuff, which is hang around Hollywood and be important and go on parties on yachts of fancy people. That's a taker. So these are signs of a taker. Now, who's a giver? Of course, hopefully everybody in our portfolio, particularly Tesla. Why is Tesla a giver? Well, yes. Is Elon Musk engaged in very fancy big picture stuff? Of course he's engaged in very fancy big picture stuff. But he is the first to say, I was on that factory floor, sleeping on the factory floor. I'm, doing stuff that everybody else is doing in the company. I'm not too good for that. So that is a giver mentality. And I think this is very important for us as investors. If we want to succeed long-term with our investments, we need to have givers in the portfolio. There's no other way. You need to have givers. You need to have companies in the portfolio that are givers. And again, we're not Mother Teresa's here. Why is it important to have givers in the portfolio? Because that's the only sustainable way to create wealth over a long period of time. Because you catch two flies with one here. One is, of course, you're catching the giver. You can only be successful by being able to give something back to society, because that's the only way society is going to reward you. And also by being able to give, you're continuously also creating new assets, new resources, new knowledge, and that is the basis for the future returns that you're investing in. So having said all of that, now let's think a little bit more about the hedge fund business itself. Let's say you as a hedge fund manager. And like I said, the purpose of this podcast is to give people a sense of what it feels like to run a hedge fund. So why don't we ask the question now, are you a giver or a taker? Let's let that sink in for a second. Are you a giver or a taker? There's a lot of people walking around on Madison Avenue or Silicon Valley, Sand Hill Road or whatever, wherever the new Sand Hill Road or Wall Street is, talking about being a hedge fund, talking about this, talking about that. Are you really set up to be a giver, or are you just a taker? Are you engaging in fancy projects and not really dealing with the nitty-gritty of the business, not really interested in what it actually takes to run a hedge fund? And do this as an introspective. Just ask yourself, for all the listeners out there who want to start a fund, who have started a fund, who are in the business of the hedge fund, of risk, let's think about this a little bit more deeply. Now, for us, Orange Capital Partners, this question is very relevant too. Are we givers or are we takers? And it's not a very clear answer here. I hope, of course, we are givers. And we have set up a lot of resources to be able to be givers. And this is now sort of the arch that I'm drawing between Adam Grant and us. Because Adam Grant's saying, for example, to be a good giver, it starts with being clear about what you can give and what you can't give, and what kind of takers you are targeting. So, for example, in our case, that means there's certain things we can do. Or let's start with what we can't do. We're not giving stock recommendations. We're not giving investment advice or tax advice. That's not what we do. What we do is we guide you, we hold your hand and your capital, of course, but we give you a chance to generate extraordinary wealth measured in terms of cumulative average annual return, so CAGR, over a certain period of time, and ideally between 5 and 10 years. This is what we give you. So you put $100 and we are expecting to make at least 15% return annually, of course, compound over the next 5 to 10 years, depending on how long you want to stick with us. And we hold your hand. So that means that we don't just invest the money, but you can actually come to us, particularly in times like we're in right now, where we have rising rates, and we have the problems with Russia and Ukraine, which are freaking the markets out. And we are here to help our investors navigate these turbulent times. This is what we're trying to do. This is what we can give. Now, it's easy to say, oh, we have to navigate you. Well, we spend a lot of resources, a lot of time and thinking in how to communicate, how to answer questions like, should we sell now because there is going to be a war in the Ukraine? This is very scary. And our answer to that is, no, you shouldn't sell because Russia is a bully. They always are bullies. Bullies are the kinds of people, and Putin's a bully, and Russia as a country run by a dictator is a bully. They don't want to throw out the baby with the bathwater. They need the system to keep working. All they need is sometimes to be able to poke, and this is what's going on. And we're not going to sell because we can't time the times when maybe there will be a sell-off for a while, but then it will recover very quickly, and we can't catch those things. And then we also have tax liabilities and all those sort of things. So no, we're not selling. So that's sort of a very rudimentary answer to this question, but it might sound very easy to come up with an answer like that. Trust me, it's not. So we are very careful in terms of what we are able to provide. Sometimes, and we are very good at saying no. In sense, oh, well, should I buy Roku pre-earnings? No, I don't know. Don't ask me these questions. So knowing when to say no, knowing when to have a firm, clear, concise, precise answer to questions, those are the kinds of things that we provide, that we are able to give. Are we takers? Yeah, we are takers too. Of course, we take your capital. In other words, we take the ability to generate fees on that capital. This is our business. So we take some things from you, but of course, what we take from you has to be in proportion to what we give. The proportion is 20% of the profit. So if we give you $100 profit, we take $20 from that profit to cover our expenses. This is how we operate. So this is our business, and the core of our business, the job that we are hired to do, is in fact to find fundamentally new concepts and engineering practices with large impact. So this is our mission. And also to hold your hand through the turbulent times, because volatility is part of the game. And volatility is very difficult to stomach for most people. And we are in the business of helping you navigate those times. Because the worst thing you can do as an investor is sell at the wrong time. This is part of our business. And we don't have the holy grail answer here either. We could be at the brink of World War III here, on the brink, of World War III, or something even worse. And then, of course, maybe it will be better to sell everything and maybe buy some weapons and food and Bitcoin. I don't know. Again, we don't have the answers to all the questions, of course. But within the context of the information that we have, we spend a lot of resources in trying to come up with the best possible analysis and answer to questions of fear, because we are in the business of dealing with fear. That is it's not our main business. Our main business is to invest capital in fundamentally new concepts and engineering practices. But with that comes fear, the fear of volatility and losing money, even if it's short term. So we're in the business of fear. We're in the business of the Mike Tyson thing. Fear is fine. The question is, what do you do with it? And we're the answer to that. If you're a wealthy person, you need somebody to guide you through the fearful aspects of financial markets. This is not investment advice. This is not meant to solicit investors. Just to be clear, this podcast is just here to help people understand what it feels like to run a hedge fund. So that's why don't use this channel to if you want to contact us. But again, in general, no matter who you are, if you're interested in generating returns in the financial markets, you need to find somebody to help you. Unless you are the one. Maybe you are a person that understands volatility, that understands the things that come with investments, and then you can do it yourself. We have develop concepts such as the natural Sharpe ratio, for example. The natural Sharpe ratio is a way to think about investments apart from financial markets and think about them more conceptually that's why it's called natural. Okay, if we didn't have Wall Street and daily ticker symbols and CNBC, how would wealth creation work? And that's a concept called the natural Sharpe ratio, which looks at, okay, how many projects is this company attacking? How many times are they right? How many times are they wrong? And what's their cost of error correction? And if you put that all together in a sort of formulaic way as an operations research problem, so you want to maximize the projects you try, and your constraint is that you don't want to be wrong too many times, or if you want to be wrong a lot of times, then you better have lower cost of error correction. If you put that all together, then you all have what we call the natural Sharpe ratio, and that gives you a sense for what is a company with high potential versus a company with less high potential. So we have certain tools developed to help people understand what wealth creation really looks like. And then we also have a lot of tools, and these are tools that are more based on experience, where we help people walk through the fearful parts of the financial market. So this is what we're giving. So we, to summarize, are you a giver or are you a taker? I think everybody should ask themselves that question, particularly in the hedge fund business. It also goes back to the question of what job is it you're actually providing. In our case, it is providing high returns and also helping people deal with fear. It is incredibly useful to have answers to the question, okay, am I a giver? Am I a taker? And if I'm a giver, what is it I'm able to give? And how do I stay away from takers? This is also very important. How do I stay away from takers? There's a lot of people in the investment world, meaning companies that are seeking capital, that are trying to attract your capital. And it is very useful to understand who are those companies and those takers and avoid them. Thank you.